Good afternoon and welcome everyone for the final session of Trading Foundation. Hope everybody's doing well. It's always a pleasure to see everybody, and I really appreciate you saying hello and letting me know where you're from. It's always good to see everybody. Love the communication. That's what gets me going. The snow and the dog are good. We're dug out pretty good here, and Lacey is really enjoying the snow. She's having a blast with that. So it's good to see everyone. Jack, Eddie, John, how are we doing?
Hey, great. Back for the finale. I'm excited to get through this. Sorry for being out yesterday.
That's okay. We know you had an important thing going on. So it was, you can always watch the recording.
Oh, yeah. No, I think I might. For those, I got into a bit of a tussle with a pit bull on Tuesday night. Yeah, I was taking out my dog and a couple, try to figure out the right word I can say in this recording. I'll say jackasses with an unleashed pit bull came at us from about a block away, and quite the fight ensued. So Rod is okay now.
Oh,
But yeah, I had to go to the emergency vet and stuff like that. So I was there the whole night, but everything's good now. Sorry for intruding on everyone's lives otherwise.
God, that had been terrifying.
Yeah, but everyone's good now.
You gotta carry a can of bear spray with you.
Yeah, something like that. So that's what we're doing, but excited to be back. And hope whenever you're ready to take it away, we're ready to answer questions.
All right, let's do this.
Just a quick update. I just noticed that the landing page with the recording videos didn't update properly with yesterday's recording. So I just redid it. So yesterday's class is available on the page that I just linked to a few minutes ago. So go ahead and give it a watch.
Thanks, JD.
All right, take it away, Mr. Hogue.
All right. So at last we come to the final day. We've had a lot of things to talk about, a lot of things to learn, starting with the history of futures, contract, cardinal rules, trading choices, traits, trading psychology, auction, technical, fundamental analysis, volume, open interest, market profile. Yesterday, we took a look at the potential idea for some trading plans, at least some trading preparations to be consistent in the way you address the marketplace. Today, we're going to look at the business plan. Now, a business plan is a little bit 40,000 feet away from the trading plan. But in this business plan, you're going to want to sell yourself to this business plan and sell anybody else in your life that is a part of your life that is going to be part of your journey in trading as it stands. This is me again. 39 years now of futures industry experience. God, it's almost painful to say that. I prefer myself to be considered more of a middle-aged performance coach. Did trade on the Chicago Mercantile Exchange for over 20 years, as well as other exchanges. Come from a long line of traders. My dad traded on the floor of the Board of Trade for over 40 years, and we're going to get a little bit of a visit from my dad at the end of the session today. You know, a lot of trading wisdoms, and I like to share those in group coaching. And if you've never been to group coaching, you might enjoy some of my dad's dad wisdoms. 2009, stepped out of the pit for the last time and started learning to trade on screen. And since 2011, I've also been with Topstep with my good friend Eddie, who was there before me. And we've had the opportunity to talk to thousands of traders from around the world and hopefully improve their knowledge and their performance. Your business plan is basically a guide to how you're going to conduct your business. This is your chance to sell yourself to yourself. Let's say if you were, going to be starting a restaurant or a coffee shop or a print shop or a frame shop, something like that, and you are going to need to borrow money, which you should never do in trading, by the way. You should never borrow money to trade with. But you had to get investors Your trading plan is how you're going to attract those investors. This plan is going to be unique to you. You are the one that is going to be responsible for creating a plan that you can believe in. And in trading, there's a lot to be in doubt of. I think a lot of traders doubt themselves in many layers in their trading, and it is one of the barriers to trading. Create a plan that makes sense to you. You can use any template. You find a template for a trading plan online. Use that as a loose idea for your trading plan. This trading is a business like no other. But take some points off of some templates that are available online, and then make it yours. And somebody else's plan is not going to suit you. You've got to create your own business plan. You should certainly have some kind of a mission statement. What is your goal? And how are you going to get there? And in your mission statement should be something that can talk about the things that you want to achieve and talk a little bit about how you are going to achieve them. Okay, this is a sample mission statement I just threw together. The mission statement is maybe to learn and to profit from markets, to grow as a person, to remain disciplined, help others, and protect my family through disciplined action and review. So you're going to be learning to do this the entire time you're trading. It's an entire learning opportunity for you, of course. The mission statement, of course, is yours. What are your motivations? Your motivations can certainly be part of your seeking and finding your mission statement. Okay, most people, their motivations are, of course, overall going to be money, but we know that if that's our only motivation and that's what we're chasing, it's going to be much more difficult to achieve any kind of success. It's one of the paradoxes in trading. Paradoxes in trading, that's a good future class. I mentioned I talked about that yesterday. I thought that today I wrote it down. So your mission statement, how are you, what is your goal, and how are you planning on getting there? You've heard me probably talk about my friend Steve in the S&P pit, one of the best traders I've ever known. And his goal was to become a good trader, to learn to make good trading decisions. And how did he do that? He started by trading small, looking for small opportunities. And the more he did that, the more he focused on making good decisions for himself as a trader, the more he was able to trade, the bigger he was able to trade, the bigger bites he started taking out of the markets. And he actually viewed the money he was making as a byproduct of being a good trader. Okay. Your business plan is not your trading plan. The mechanics of how and when and where you're going to enter into the marketplace, that's your trading plan. Your business plan is a document that will change. It is not set in stone. It is a document that is going to tell you how you're going to conduct yourself and maintain yourself in your business. It is going to help you remain calm because you have put this plan in place. And then, of course, you're going to be working on your trading plan and your preparation for trading, like we talked about yesterday. This is going to help you hopefully trade a little bit more carefree, not careless, because you're going to be able to remain calm. I've talked to a lot of traders, and this idea of being able to trade carefree but not careless has been a sticking point with a lot of people that I've worked with. The idea of being able to trade carefree is, maybe it's a bit of a misnomer. being a trader and being successful at trading is all consuming in importance to those that come into these markets, and even some of those that manage to stay in them for a period of time. But being that close to and demanding of your ability to succeed at this is one of the barriers to succeeding. Yet another paradox. It's like the character in the book of Mice and Men, Lenny. Now, Lenny was a nice enough man, but he wasn't all together there. But he loved little furry animals, and he and George would be going through their survival of the Great Depression, picking up work where they can and walking wherever they needed to go. And then Lenny would pick up little mice or little bunny rabbits, and he loved little furry things, and he'd pick them up and play with them and feed them as he could. But he had trouble leaving them alone. And eventually every little furry animal that he picked up, he ended up killing just out of love. He loved them so much, he overloved them, and he ended up killing them. And I think this statement about caring free but not care less can keep us a lot further away from what I call Lennying our trades, managing trades, over managing trades, over trading, being, abnormally worried about risks. And that's really the only thing that we can control is risk. Kind of keeps us too close to trading to be successful at it. Having a business plan and a trading plan and a lens to consistently use to find context in the marketplace can help you relax a little bit. You're prepared. Your business plan is going to hopefully have a part in it that's going to remind you to stay creative, because things are always going to change. And in markets, that is always true. When it comes to trading, if you ask me, trading is all about change. Prices change, markets change, strategies change, everything's changing, and you've got to be able to be receptive to the changes that the market is telling you. And you've got to, of course, be curious, because you love what you do. Trading is very difficult, but it can be very rewarding as well. We know that there's high highs and low lows, but if you don't have a true passion for markets, if you're not consistently curious to know more, you're going to probably have a hard time continuing to do it. It's got to be something that you are consistently curious about and love what you're doing. Even if I'm not participating and I see something in the marketplace that gives me, something to try, even if I miss it, but I'm right on it, I still have a degree of satisfaction because of that search for curiosity. The business plan should have a paragraph or be part of the outline that explains why your presence in trading is important to the service of others. Okay, it seems sometimes a little bit strange to be thinking about that when we're really talking about, capitalism and doing things that are always in our best interest when it comes to trading. But this is more than just us. This is more than our ability to be able to profit from price action. If we are going to be providing a service to the marketplace, the one thing that comes to mind right off the bat is liquidity. The speculators were introduced to trading for the liquidity. The difference of opinion is what drives prices and allows the market to have the ability for easy entry and exit in most situations. It's got to be pretty extreme situation for you not to be able to get out in the S&Ps. Some were more liquid than others, of course. And I know my NASDAQ traders are well aware of that. Even if we're a 1 or 2 lot trader, just the fact that we are engaged and operating in the marketplace gives somebody else the opportunity to enter a position because we were there to trade with, or exit a position because we were there to trade with. Okay. As you get better and hopefully more successful in futures trading, you can help others. You can educate others on how you were able to perhaps become successful, or at least profitable and consistent. You can provide mentorship for others in your life. And how about philanthropy? If you become really successful at this, think of the good that you'd be able to do for the greater good, for others. Always something that is something to serve other than yourself. If I were building a business plan and I was looking for investors, this part would be extremely important. It's more than just me and my business that I'm thinking about. What is my business going to provide for others? It seems strange. It seems strange. But think about it. Okay, your business plan should have a plan, a paragraph, or an idea of how you're going to treat yourself. Okay, you are your business. You need your business to be healthy, both inside and outside of the business. You need to be healthy physically and mentally. Have a workout plan, even if it's just walking. Think consistency and routine, just like we're going to be doing our homework to enter the marketplace. This is something that I had some trading psychologists I was working with when I was at a prop firm. Now, I was young, I was healthy, always was a little bit heavy, and self-esteem had come up as a barrier to my ability to consistently profit. I could profit, but keeping it was different. Remember, we talk about the idea that this environment, you can pay yourself whatever you think you're worth. I didn't think I was worth that much, so they told me to, if I was going to be able to continue to work with them, I was going to need to go across the street to the gym 2 hours a day, 5 days a week, and get healthy, get stronger, get better, get feeling better about myself. And it wasn't just about that. This is where I get the idea that being of service to others can increase your ability to raise your value of yourself. I was also told, at least once or twice a month to go donate time, go to a soup kitchen, go to a food depository, go to buy some sandwiches and walk around and give sandwiches away to some of the homeless people. It's a very selfish thing to do, but to help others is always a good thing. Next bullet is to make sure that you have in your plan that you are going to go easy on your self dialogue. Okay, if you were a business and you had employees and you were constantly berating those employees, do you think that they would stick around for long? What makes us think we're going to stick around for long if we are constantly haranguing and browbeating ourselves? We all have a tendency to be our own worst critics. And it's a practice to improve your self-dialogue. Anytime you say to yourself, well, that was dumb. No, it wasn't dumb. That's something to learn from. Anytime you say should have, would have, could have, might have, had I, okay, that's something to learn from. Anytime you get angry at the markets, you are angry at yourself. And you got to get past that, because you are going to, you're going to carry a lot of venom, and venom is not good for anybody. Not sure if I chose one of those as the dad wisdoms, but we can talk about that as we get to that. Your self-esteem can choose your income. Here it is. The old guy that saw me walk on the trading floor with my brand new badge said, hey, congratulations. Remember, you can make anything you think you're worth. Once you begin to understand markets and yourself, you can make anything you're worth. The abundance that is available to you in these markets is practically limitless. Now, market fit. How do you fit in the market? It's a old picture of me in the S&P pit. I was having a bad day that day, but they never seemed to take pictures of me on good days. They always like to catch me on bad days. Maybe I was a little more expressive on those days, but the market fit. Okay, well, if I'm going to be coming into this business, is there room for me? What is it that makes me stand out from others? What positive traits do I have? What skills do I have? Now, we all come into this green. We all come into this as amateurs. And it takes time. It takes time to figure out which positive traits you're going to need to focus on. Which strengths are you going to need to focus on? Don't focus so much on the bad things. Of course, you're going to want to think about those and minimize their ability to control your actions, but focusing on the strength, I think, is even more important. You're going into a market that's full of experts and professionals. You are going to need all the knowledge you can get. What kind of knowledge are you bringing to the table? This is your business plan. You should be able to say, you know, I have written X many books. I have traded on a simulator using deliberate practice, not just winging it, trying to put together a trading plan, trying to put together the lens that I'm looking at. I believe I have something that I can work with here. So that's what you're going to be bringing to the table. Ability. Is there anything that sets you apart? We all, I think, have, well, I think most people have the ability to become successful at this. What sets you apart from the rest? Maybe it's your ability to take losses that maybe sets you apart. Maybe it's out and out motivation and desire. Well, if you're motivated, then you've done your homework, you do your homework, you'll seek more homework. That motivation might be what is going to help you get to where you want to go. And then you're going to be in this marketplace, you're going to have some skin, and some thick skin. It's not going to be easy. Dad's got a few wisdoms about that too. I'm not quite sure which ones I've selected, but you know, the markets are tough. They are going to test you. They are going to be putting you up against things that you think you already know. They're going to be rough times. There's going to be great times. If you don't have thick enough skin, you know, I must have quit this industry 100 times, but I always seemed to come back the next day. Just maybe I wasn't smart enough to walk away, but in the long run, it was a good thing that I did. There is a tenacity, there is a thick skin. Dad used to say it's the hardest steel that comes from the hottest forge. There's a lot of hard learned lessons here. What is your motivation? Why do you want to start that coffee shop? Is it just about the money? Money's a good motivator. I found that lack of money is a real good motivator. But is it your life's work? Is this something you've always wondered about? Is this something you've always tried to find, to see yourself doing? You know, your motivation may have you motivated to get involved, may have you motivated to learn, but are you motivated to truly succeed? Succeeding requires change. Things are going to change if you become successful at this. Your job's going to change. Maybe your home, maybe your car, maybe a lot of things are going to change. Are you ready for that? Is that part of your motivation? And are you ready? What if you do succeed? Can you still enjoy the ride? You know, succeeding comes with different fears. You know, I've come to this level of success. What if I can't maintain it? Are people after me because I've reached this level of success? And you know, always be motivated to keep chasing the money out of your mind. Good trading decisions, the next good trade, that's what you're looking for. Chasing money makes it more elusive. Now, like life, it's about balance. Whole personal story, and some of the personal performance coaching clients have heard this story. When I was in high school and I went to college, to art school, I was a potter. I could take a ball of clay and make anything on a potter's wheel. So there's a book, it's called Centering. It's centering in art and in life. And so it occurs to me that when we're centered as traders, we're calm, we're receptive of information, we are centered. And if you've ever, you know, spent any time on a potter's wheel, you know that the first thing you do when you put a ball of clay on a potter's wheel is you center the clay. You get it wet, you spin it real fast, and you get it so that when you take your hands away, the clay, even though it's spinning at a high rate, looks like it's sitting still. There's no movement. If it's not centered, it's chaos. It's wiggling all over the place, and there's nothing you're going to be able to do with it until you get it centered. And you know, that's one of the things I've thought about talking about. I've usually have kept that to myself, but all of the planning, the business plan, all the things we're talking about today, all of the things we talked about yesterday, and then taking the time to continue to learn more about the tools that you're using, and yourself, internal, your psyche, the things that scared you as a child, the things that made you happy as a child, the things that have made you happy your whole life, things that have happened to you your whole life. They all make this beautiful mess like we talked about yesterday. And there's a lot of wiring in there that some of it is not going to help in trading. Some might, but try and think about, you know, yourself. When you are calm in trading, you're centered. The ball of clay is spinning, but it looks like it's sitting still. And then think about when you're trading and things aren't going well. you're getting closer and closer to chaos. The ball of clay is not centered, it's jumping around. Bring yourself back to center and then re-engage in the market. Like life, it's about balance. Business, trading, balance, life. It's all about balance and centering. Market strategy. Your business plan should say, okay, I have X number of risk dollars. What percentage of risk dollars am I going to risk with a specific strategy or a specific tool or market state before I recognize that something might be wrong? What is your daily loss limit and your overall loss limits? And then you got to put together as part of your strategy and your business plan is how are you planning to respect them? When I start getting close to a overall limit or a daily loss limit, my ball of clay is usually not centered. I'm closer to chaos than being centered. You got to be able to walk away when the chaos starts to hit. It's difficult. We always have this idea that the next trade might be it. What if the next trade is the one I've been waiting for and it's going to make me whole again? Dangerous words. What if? If you've been at this for a while, you've probably seen most of the time when the outcome is what if this next trade is the good one, it's the bad one. So you're going to have a plan to stick to it. It says more tomorrow because I was going to do this one yesterday, but we switched it back at the last moment. It's to have a plan for what you are going to do when you reach them. Okay, then what? I've got X amount of risk capital. I've reached the risk capital that I was looking at for, a review of, which we should be doing every day, but a review of my strategy or my lens. Don't throw the baby out with the bathwater. It might take just a gentle tweak to your trading plan or to your lens to improve your performance. I found a lot of times that folks are really close to a successful trading plan, and risk aversion tends to be one of the biggest problems. Risk aversion, especially when markets expand, when there's higher volatility. That risk aversion, speaking of which, where are we at? That risk aversion, speaking of risk, that risk aversion can have us risking too little on each trade. I never suggest expanding risk unless the market warrants it. But have a plan, always review every day, and then take time to review your trading over a larger period of time to see how the market is, to see how you are doing in the markets. How are you going to manage profits? You do become profitable, how much are you planning on leaving in the account as risk capital? There was a trader on the train back when I used to ride the train with my dad, and he was a new trader, and I don't think he had a lot of money, and but he knew my dad was on the floor, so he would pick my dad's brain. And he asked my dad one day, he says, how much money should you keep in your account? You start making money, how much do you keep in? And my dad says, well, I don't keep anything more than $1 million in the account. And his eyes got real wide. He said, and my dad was kidding, of course. The more money you have in your account, the more you're going to be apt to risk more. Figure out where you're comfortable. There's a few things that guys used to do on the trading floor. They would take out everything they made every week. They would keep a base number of risk capital in there, and they would take out what they made every week or every other week. Traders don't like to write checks. So, even if you have a bad week and you end up having to write a check for the next week to refund your trading account, you have it, hopefully, but it hurts that much more. So that's why they're keeping too much in your account is not a good idea. But the last point on this is, how are you planning to invest that money? And how are you planning on donating? You don't want to just start making tons of money and put it in the bank. Have a plan for how you're going to invest it. As many traders do, they'll have an income stream coming into trading, and then sometimes they'll create another income stream from trading, starting another business. Think about your business plan as you get closer to completing it. Is this something you could sell to investors if you had to? Just, think, does this plan look solid? Is everything that I need to look at in it? If you can't sell it to yourself, just keep working on it. And it's, this is not a document that's going to be chiseled into stone. You can change it. You can make adjustments. Talk about your plan with a trusted partner, a wife, a friend. Think about past performance. A lot of people only have simulated performance, not even in the trading combine. At least the trading combine, there's rules and accountabilities and consequences. Can you count on overall continuation of your past performance? Can anybody? And do not borrow or trade with money you can't afford to lose. Risk capital is money that you wouldn't miss. It's hard to say that you wouldn't miss it, but it doesn't change your lifestyle. And that's another paradox, because a lot of traders are here to change their lifestyle. You can do it. Take time. Be patient. Work day after day, looking for the next good trade. Again, your plan is not set in stone. As your trading evolves, so too should your trading plan. So too will your business plan. Not a static document. Adjustments are going to come and be necessary. Products, trade size, risk parameters, volatility, trade frequency, account sizes, and entrepreneurship, mentorship, and many other factors may change your plans. One caveat to that is having a plan to not become a strategy jumper. Find your lens, become an expert with your lens. Okay. Every business plan is going to, of course, need to include important information. Internal information. You don't have to show everybody your account numbers, phone numbers, IP addresses, internet connections, contacts, any other information that you need. I've been guilty of this. I've, had a trading platform and set a password for it, didn't write down my password, forgot my password, and there you go. Didn't have a solid plan. Dad wisdoms. Here's the old man here. Probably about 1960. Yeah, maybe a little later than that. It looks like they have the electronic price boards. He was charged with hedging Ralston Purina's soybean needs, because Ralston Purina is a huge manufacturer of animal feeds as well as consumer staples. The Board of Trade at this time was having a publicity problem. A lot of folks in the public thought that the Board of Trade was fixing prices for grain when nothing could be further from the truth. So they had they brought anybody from the public they could learn about the industry. And this was right about the time when Ralston Purina created Chex cereals. So they sent a whole bunch of Chex Mates, different types of Chex cereals down to the trading floor for my dad to hand out and give to his buddies and give to people. Ralston has since sold Chex cereals to General Mills, but still, this was part of his job and his life down there, was hedging to make sure that Ralston got their soy protein as cheap as possible. You always say, it's markets are wily beasts, and it's better to get out when you can, not when you have to. It makes me think about the folks that are asking about the price limits in the equities. When things get volatile, we start getting close to those price limits. We don't want you holding any positions long into any down the limit situations, because you won't be able to get out in those situations. Everybody tells you this: learn how to take a loss. He always just said, accept smart risks. When I walked on the floor when I was a mid-am trader, all the old guys on the board floor said, "Hey, congratulations, learn how to take a loss." And to me, this was preposterous. I'm here to make money, not here to take losses. Wasn't too long until I figured out what they were talking about. Another data was, the money is easy to make, easy to lose, very difficult to keep. That's why part of your business plan is going to give you the plan on keeping profits. If the market's going with you, you'll never have enough on. But if the market's going against you, you'll always have too many on. Seems every time I used to try and boost my trade size was the wrong time to do it. But this is true whether you're trading 100 or a one lot. I always like this one. The market always looks the best at the top and the worst at the bottom. Everybody loves the highs. Everybody hates the lows. And that's going to do it for today and for the 4 weeks. I can't believe it's passed already, and we're already looking forward to more classes, more creation of content, and hopefully more ways to help you get successful.
Well, thank you very much, Hogue. Always love that summation there. It really is. The vast majority of this stuff is just all mental and psychological, and being able to look objectively at managing your capital more than anything else. So thanks, Hope, for all of that. We'll check out any questions. I saw people asking, are we leaving the videos up at that link? Yes. And to be completely honest, I hadn't really thought too much about what we would do with that specifically afterwards, but for the foreseeable future, we're keeping them up. And, we have your guys' email. So if it ends up moving somewhere else, we'll make sure to alert you to that. So that's great. We'll be working on some certificates to send y'all. If you those should be coming out in the next week or two. If you have any questions about it, feel free to reach out to us and we'll try and get that together. But JD and Eddie, got anything else? I'm going to look at these questions now because there's a few.
I got to add, though, knowing John for Hogue for this long a time, he's a plethora of knowledge and education and friendship. I mean, you've shown me a lot on the trading floor also, John, when we were on the trading floor. But the topic that you had here is, I think it all comes full circle. Why are we here? I talked to a lot of my traders about that dream. Being the boss, being the CEO, and we're each one of us.
Mhm.
We're the CEO. We're the one making the product. We're the one selling the product. We're the one mopping the floor. We're the one taking the garbage out. It's all about us. And if you're striving for a business sense and making this something more than a career that'll prosper down the road, you've got to keep it in that point of view where hey, I'm the one clicking the buttons, I'm the one doing all the work, and this is something that I really need to focus on and commit. I tell you, you drive by a place where it says going out of everything's off, going out of business sale. I honestly feel sad for those people because they had that dream and obviously it didn't work. So, this is all really about commitment, good stuff that you're talking about. And just remember, you mentioned life is a balance. This is a balance also. And, always remember family first. That's what it's all about.
The Vin Diesel method. So I will read some of these questions here. I'll also open it up. I don't know how long we'll be able to stick around for questions. Everything that Hogue says is true, and we come from very different backgrounds. Where I'm someone, for instance, spent my whole career doing electronic and algo trading. But these principles, they all still hold regardless of what you're doing. And we'll probably do another deep dive into that. It's not really part of this course, but if you have any questions about any of that, I'll stick around and field some of them. Hogue seems to have disappeared for a second, so I will start reading these.
I'm here.
Back. Okay, perfect. Someone asked, how do I determine which strategy suits me? Since I'm absolutely new, I'm jumping from one strategy to another and trying to decide what works. What do you think, Hogue? I could start by saying that it's a delicate balance between trying different strategies to see what works and also focusing and trying something enough that you have enough feedback, enough data, enough different market states to truly decide whether it's right for you. I mean, it's like if it would be like deciding what, I'll let Hogue give a more specific answer, but it's like deciding what instrument you were going to play or something. You wouldn't get really far by jumping around to like a saxophone and a piano and a guitar. You'd just be kind of okay at all of them. Hogue, for someone starting new, what do you think about that question? How do you figure out what sort of strategy suits you?
Okay, this is I think it's important to remember that you are new at this and that's going to take some time to find your legs, if you will. As far as being a strategy jumper as a new trader, we don't know what we don't know yet. So the part of what you're going to need to do is you're going to be get a technical analysis book, or go to chartschools.com, start learning about the different patterns. Look at candlestick patterns as well. And as you learn more and more about these patterns, you're going to see these patterns repeating in just about every time frame chart. The chart is of course going to determine your trade frequency, but the technical patterns and candlestick patterns, and they repeat. Okay, so educate yourself as much as you can about the tools of the trade, including market profile, if you're so inclined to market profile. If you have questions about it, of course, get Mind Over Markets, or if you look online, there's free downloadable versions of Mind Over Markets on the internet. You don't have to even buy the book. Any books that you do want to go to check out, go to a library. If you're close to a library, a lot of these books are available in the library. Okay, and then when it comes to trying to find a time frame for you to trade in, as a day trader, we know that we're going to be pretty much just operating from a certain time in the day flat by the end of the day. Think about who you are as a person. Are you a person that really feels the need to be active a lot during the day, maybe you're going to be more apt to a shorter time frame strategy. If you're somebody that is more calculating, maybe you're going to be looking at a longer time frame chart. I don't suggest being a very short time frame trader. I don't suggest trying to find opportunities where I can make 2 or 3 ticks 100 times a day. That niche has
Exhausting.
been, it's exhausting, number one, and that niche is largely covered up and taken by the computers, the algos, and the HFTs. Your competition is going to be really fierce in that time frame. So I suggest looking at a longer time frame. I wouldn't go any shorter than a 5-minute time frame. My main chart is a 30-minute time frame bar. But like Jack said, excuse me, I apologize. But like Jack says, you've got to stick with one thing long enough to find out if you're learning anything from it, if it suits you. And that's why there are simulators. Is we got to see what kind of trader we are, and it's a journey of the self, and give yourself some time to in different time frames and different tools. If you find success using a stochastic, you keep working on it. Nothing's going to work every time. I don't even like to use the word work. Nothing is going to provide you an opportunity every time. It's all more about managing the risk when we're wrong and being able to capitalize more when we're right. We're looking for reward over risk. So, we find a lot of scalpers are kind of upside down on that reward over risk. They're trying to make three ticks, but they'll risk 10 ticks to get it. That's upside down, if you ask me. So start thinking about, learning about the charts, learning about the tools that speak to you. It's going to take some time to really find the times, the time frames, the charts, and the tools that speak to you. Most important is mind over markets. That first 100 pages, I had been in the markets since I was born. My dad was in the markets. I got hired as a proprietary trader. I struggled for a long time, and it wasn't until I read the first 100 pages of that book till I started to really understand what I was doing, what the market is. It's an auction process. So start with that first 100 pages, find that free PDF of Mind Over Markets online. If you Google it, it should be relatively close to the top.
Yeah, I think someone shared it in the comments.
Okay.
Great.
Yeah, there it is.
Cool. Have a quick one here. Is more a note. JD, someone asked, would it be possible to share a template which we can use as a starting point for creating a business and trading plan? JD, I say we write that down as possibly a new piece of content we have. I don't know if we have something like that right now.
We do not, but we'll be putting together some blog articles for all of these videos in the next week or so. I could put an example of my own personal business plan in there, or maybe if Hogue wants to contribute one also. We'll talk about it a little more, but we'll put something together for you for sure.
Sounds good. So, are we gonna get see a sample trade based on a market profile that shows how to execute the plan? I think probably check out the 745 market forecast with Hogue on YouTube. That's when every day he goes into the market profile. So that should probably be what you're looking for there. We don't have it set to do right now. I have one question I'm saving for the end, so I'll go through a few of these right now. How do you execute? I'll just answer this one really quick. How do you execute a trade from I presume it stands for high time frame that may take days to play out when you have to exit a trade at 310 for the combine rules? Do you just re-enter a new session? So a few things here. In futures, Topstep is meant for day trading strategies. And the reason for that is kind of obvious if you think about it. is the capital requirements. When you want to hold a future overnight, the margin requirement grows times 10. So it's just the nature of what we do would make it impossible for us to put up that sort of capital. Now you can do it. I don't personally trade Forex, but Eddie, perhaps how you can hold in the FX combines, you can hold for everything but the weekend.
Right. What it is Forex. It starts Sunday night. You start trading around 4:30. You can hold that position all the way through the week until Friday at 3:45 p.m. Central Time, where you need to be clean and sober, if you want to call it, working nothing.
It's a good thing. Do you have to be flat for the micros combine? Is that still you can hold the whole time?
Are you talking like an economic event, or for the micros? You can hold them over the weekend. You can hold them through the week. You can hold them through elections. You can hold them through the apocalypse if the markets are still up.
So that's still an available option. About the getting back in part of it, maybe it's not that wouldn't be the most straightforward way to do a strategy like that. Be something like the micros combine or FX, or in your own brokerage account. This would be a good place to use micros because you got to trade small size. You're holding something for a long time like that. So hope that helps a little bit. How many months on average are you guys positive in a year? How many days in a month? Okay, I can answer this from my experience. Is a very different form of trading, where I think over 6 years, I only had one losing month. No. I had 2 or 3, but you'll never guess that it came all towards the end. But that had to do with the sort of strategy we were doing. Days in a month, I would say 3/4 to 7/8 of them we were positive. But once again, that was different than outrights. Hogue, you might be able to answer this better for outrights.
It's streaky. There's periods where you may be profitable for 3 weeks in a row and then lose money the whole next week. I'm looking for something here, more dad wisdom, and by my dad stopping by, I meant more about the dad wisdoms here. He's got something here that might answer that. Where is it? Oh.
Just let me know when you find that, Hogue.
Yeah, go ahead. I'll
yeah,
put it
a lot of this will depend on the type of trading you do. I mean, if you are scalping or doing, mean reversion range trades, you're probably going to have more consistent up days compared to that. Whereas if you're a momentum swing trader, stuff like that, you might be looking for the big. It all depends on what your risk reward ratio is. The treasury trading we were doing with spreads, for instance, we would have a lot of average to good days, some very good days, and then it was all about controlling, because it was all mean reverting, who could be the first off the ship when there was a blowout. So it was all about risk management, that you didn't want to take the backbreaker when things went against you. Hogue, just motion when you found it. Who on your team actively trades the markets every week? I do not in futures in the moment. I do in options. JD, what's your cadence? I know Dan trades virtually every day. What are you up to, JD?
I'm trading pretty much every day also, unless I have a super stacked meeting calendar for work. Otherwise I'll step aside and not even look at it. But 3 to 4, I should say 2 to 3 days a week I'm in the market.
Yeah, It's fun. We have like a Slack channel at work where we kind of go back and forth with who's in what right now. So it's always good to have a community doing that. So go out and find Discord or whatever works for you.
This is wonderful. Everybody's putting up all these different books and study guides and all kinds of stuff. This is a community looking out for each other.
Yeah. Someone asked if there's going to be a discount. You've seen through our thin veneer. Yes, there will be the same discount available. It'll come out after this, and it's good through Monday at midnight. And by the way, for future viewers of this, it is hello from the past. It's Thursday, February 3rd, 2022. Jeff asked, when you talk about taking a bigger bite out of the market on a 30-minute time frame, what are you looking for in terms of a typical profit target and hold time? Let's say E-mini at 60 ATR. Sorry, this gets to a little bit specific. I'm usually on 2 and 5 minutes, so trying to calibrate what risk rewards looks like. Okay, this makes sense on a higher time frame. Yeah, I would get away from using 1 or 2 minute charts to start. Ho, you anything to add to this?
Yeah, bigger bites. Just looking at a 30-minute chart, you're going to be probably more prone to, well, I would hope, to be trading more at extremes. I'm trying to think of an average of the hold time that I have. I mean, sometimes if it's a trend day that I get in very early in the day, I may be in it all day long, and I don't know, because it's a trend day, what the potential profit target is. I'm going to stay in it for as long as I can possibly hold out. Not going to buy, we don't buy the low and sell the high. We take our bite out of the middle. But a day like today in the S&Ps got a little bit of a down tint to it, and there have been 2 or 3 opportunities near the high of the day that offered a rotation back to point of control or a full rotation back to bottom of the range. Today it's been a little bit more active day because of the day type. The opportunities are smaller because we're off on VIX just a little bit. I'm sure the ATR is smaller than it was 2 weeks ago. It's really market generated information where I'm looking to take trades. It's I rarely do I go below that 30-minute chart though, because when I start getting down into that 5-minute or shorter time frame, I can feel my heart start to palpitate.
Sure. Somebody asked about just leaving this up for a little while so they can get the books that people are throwing out there. Yeah,
Sure.
We're answering now. We'll see. Hopefully there's enough time. This will also be up tonight. I don't know if the comments will be in there. Joel asked, being successful and then going on a losing streak, could that be due to a change in the algos? For clarification, are you talking about in general or in regards to how I mentioned earlier that my only red months were at the end of when I was working at a prop shop? I will wait on that. I mean, in general, I don't think you can worry too much about what the algos are doing. As we've mentioned repeatedly with the scalping strategies, those are much, if not all, of your competition from a professional level. So we could do a whole thing on algo trading and how that affects the markets. Oh, well, I won't go into the full thing right now, but with the strategies we were using, I would say the general shift in algo trading, and sorry if this gets boring real quick, is that from like, say, the mid aughts, is that what we're calling 2000 to 2010? The mid aughts through like 2015, around there, it was a speed arms race. I would say like the thing that all algos were gunning for was speed, where you would have crazy convoluted contraptions with co-locations and microwave lines and people burying fiber optics just so that they could get the lowest lag possible. And I think what we've seen is in the case of what I was trading, treasuries, the decreasing rate cycle made it such that the market was completely locked up and not moving anywhere. And as you know, as traders, you need movement to trade. So it became very difficult. The next generation for algos, so it was all about speed. And now I would say that it's transitioning to all about information. So if you look at like Renaissance, who's, you know, the Rolls Royce of hedge funds and trading, is they have these huge warehouses where they gather data on everything. And, you know, the founders there have like doctorates in linguistics, like machine learning and stuff like that. And the new battle is how quickly you can process through novel methods all that information to make trades. Speed's kind of out. I mean, like in stocks and stuff, it's there can only be one fastest. So I won't bore you all with more on this, but that's kind of my high level thoughts on the algo stuff. So how about following higher time frame but getting in on 1 and 2 minute charts to minimize risk? That was a addendum to that earlier question, Hogue.
You know, a lot of folks, I think, tend to do that. You know, they're looking at the longer time frame charts and then kind of refining their entries with the shorter time frame charts.
Yeah,
it's easy to get lost in the short time frame chart and forget where you were at in the longer time frame chart, but people do.
Yeah. So like one last question, I'll answer the other ones in typing while you're doing this, is Hogue, overall, what do you like the most about trading and what do you like least?
I like the challenge of deciphering the information. It's like a puzzle to me. I used to do 5 crossword puzzles a day on the train on the way back and forth. And it's like a puzzle, and you know, it's money's great. Yeah, sure. It's also that satisfaction of being able to say, I figured it out today, or I figured it out for that trade. Things I don't like about it. Nobody likes losses, but you have to remember it's part of the game. We're never going to be perfect. Something I've struggled with, you know, my whole career in trading is I always want to be perfect, right? We always want to have winning trades, never a losing trade, but it's just not realistic to have that kind of expectation.
Cool, very much. You know, I started to type this. So someone asked if we were looking for experienced traders here. The funded traders at Topstep come through the trading combine. We don't operate as a full, I don't know how to phrase this exactly right. The professional traders at Topstep, we all have we happen to have trading experience and we all trade and have professionally, but we also have different roles. Like we hire for different roles within it. For instance, education or risk management or content creation and things like that. So we post job openings on our site, which is topstep.com. So if you're a kick-ass trader who's also, say, a paid media specialist, we wouldn't hate it. So it looks like that's about it as far as the questions there. How many risk managers do you have working at Topstep? We have, it's changing a little bit. We have a risk management team now. When we started, it was just Mick. I don't know if you guys have dealt with Mick's another professional trader here. He's in Coach's Playbook.
Prior to Mick, it was me.
Yeah, exactly. It's now expanded to, we probably have 3 people that are kind of, that is their whole job, because as you imagine, you got to monitor all these positions. But everyone you see here, there's probably close to 8 to 10 people that are kind of part of shaping our risk management strategy, etc. Cool. So I think that that is about it. Hopefully you've had time to write down those book suggestions if you were looking to do that. And
I will.
Yeah.
I'll leave the meeting on so you can see the chat and you can write down what you need to write for 5 minutes after we're done.
Awesome. Well, from the bottom of my heart, thank all of you for showing up. It's pretty incredible to see how many of you showed up for many classes. Some of you even for all 16, which I did not even do because I was gone yesterday. So that's impressive. And thank you very much to JD and Eddie for helping out, and Holden, who's behind the curtain there. And oh yeah, I'm gonna go grab the puppy while you give your sign off here.
All right. Okay. So this was what I was talking about with the question about, how many days a week or how many days a month are you profitable? This was something my dad told me even before I started trading. He'd say, you know what, son, I could double my income if I would only work 3 days a week. And I'd say, well, why don't you only work 3 days a week? And he'd look at me like I said something goofy, and he'd say, just tell me which 2 days I'm going to lose money.
All right. Here is our little pit bull fighter here.
There he is.
He is completely good. No cone. You can't keep him down. So I'll let you sign off here, Hogue.
The champ.
The champ.
All right. Well, thank you, everybody. It's been a pleasure spending the time with you. We look forward to spending a lot more time with you. Our goal is your success. And we will keep working towards that if you keep working towards that. Have a great day, great rest of the week, great weekend. Be good to each other. Be good to yourselves. Blessings to you all. Have a great day.